Hello, welcome to the Market Outlook webinar in association with Aondo. This webinar runs every Wednesday lunchtime at 12:30 in the afternoon, and it's a look at the major currency, index and commodity markets to see what the trends have been over the last few days and where the opportunities are, where the levels might be worth keeping an eye on in the days ahead. I just put up the risk warning while I'm talking away here. All of these get recorded, so if you can't make it or you miss one, you can always watch the recording that's available from the website. And if you have any questions, I'll put my contact details up at the end, and you can get in touch. When we're looking at the charts today, we're going to be using Aondo's Trade Hub platform. So I'll bring that up. They've recently upgraded their charting, and it's I think it's quite a big jump, I think, from what they had before. But we're going to start off, I thought, for a change, because we normally start off with stock markets, with forex markets. I thought for a change we start off with stock markets, because I think what we've seen in the last couple of days is quite interesting. First of all, this is the Dow we're looking at. We look at the Dow, the S&P, the FTSE, and the DAX. I think maybe the S&P, the broader US stock market, gives a better representation at the moment of what's going on in the US stock market. But to remind ourselves, we had that massive Dow fall beginning of the month, where it dropped, I think it was about 3.8%, something like that, on that Friday. So that big sell-off, the sharp recovery on the Monday that didn't claw back all of the losses from the Friday. And since then, it's sort of been a little bit corkscrewing. And I think this time last week we were looking at it, and it was stuck sort of in this corkscrew, just this triangle. And then it broke higher. So I thought when it broke higher, I thought, well, this is it. This is the start of a much bigger recovery. But then it gave up these gains pretty sharply. But for me, the big level to watch has been these lows that we've seen in the second half of this month. So we're looking at, I think probably that the bigger level is maybe 18,000, but the lows, here. If you've seen any of these webinars before, I'm a big fan of keeping an eye on previous major highs and lows. We did have a lot of volatility overnight yesterday morning, and that was during the presidential debate. So here's the moves. I think that's right, isn't it? Yeah. So we're looking at the moves that started when we were all asleep, probably in the UK. A big rally up of sort of 150 points or so, and then by the time the session started yesterday afternoon, we were back down around about 18,050 again. So some strange moves, but during yesterday, the US market seemed to find its feet again, and we had a relatively strong close, closing near the highs. This is the overnight market now, and it's pushed out higher again. So it does, to me at least, suggest that for me, in probably short to medium term, I'd expect the market to rally. I'd want to be a buyer of dips, and I think that the first big level to watch, and I know I say this every week, the previous days high and low, and you can see from yesterday, we're already trading just about through yesterday's high, but from yesterday we had the lows just ahead of the 18,000 mark, and again from the day before. So I think that's clearly a big level. If we did see 150, 200 point sell-off in the Dow Jones from the current levels, for me it looks like a buying opportunity. It looks like we've shaken off maybe the worst of this correction here over the last couple of days. So I think the bias is still just about up. But I think if we look at the S&P 500, I think we get almost a much cleaner view of this. For those of you who aren't familiar with it, the Dow is the one that we do, because that's the one that plenty of people have heard of, even if they don't really look at markets. But the S&P 500 is a truer representation of the US stock market, because it's, as its name suggests, it's 500 shares, so it's a much broader cross-section, whereas the Dow is just 30 shares. I mean, they move pretty much the same way, but I think we do get a bit of a better picture. You can see the S&P almost bang on, stopped yesterday almost bang on the overnight low before the debate started, and it hasn't taken out these previous lows from earlier from last week. If we look at the Dow, we did have, I think, a bit of, there we go, you can see that difference, a bit of scrappy trading through these previous lows from last week. So the S&P is respecting its levels a bit better, because it's a more smoothed out stock market average. So I think whichever one we're looking at, the fact that it closed on the highs yesterday is a positive sign. The fact that in the overnight market it's moved through the highs is another positive sign. So for me, the immediate target, S&P target, would be a run back up to those highs from about a week ago at 2180. If it fell to 2140 this afternoon, I'd want to be a buyer. But I think if it does start to fall, it doesn't necessarily mean the market is gonna plunge off a cliff, because there is just so much support, just below yesterday's low. So this is the S&P we're looking at again. So if we started plonking in some support lines, and again, I'm a big fan of doing this sort of stuff, because it helps me think about, well, if the market does get down to these sort of levels, what do I want to be doing? So we have the lows from yesterday, 2140, near enough on the S&P, and then if we go back the 21st of September, so last week, we got 2133. So there's all these little dips where the market has moved quite sharply off them. So famous last words, if we saw US stock markets sell off over the next couple of days, there's an awful lot of potential support, I think, just below where we are now. So for me, the bias, and if I was drawing a trend line in here, let's just plonk our trend line on from, I don't know, if we went from down here, I suppose, if we were going to do it textbook style, the S&P is still respecting that recovery trend. Don't get me wrong, I still think, if we saw much of a rally from where we are now back into that range we had through the summer, these are daily candles now, this is going to be a problem. But on the hourlies, at least, based on what we've seen, I think over the last couple of days, the bias, let's go back to the 4-hour chart I was looking at before, the bias is still up. So for me, any weakness, I'd be looking to be a buyer. We don't have the payrolls, the unemployment numbers, next ones are out a week on Friday, I think, isn't it? The first Friday in October. So I don't think there's an awful lot going on. I think there's a lot of focus going to be on this presidential election now. And I think the next debate is it October the 9th or October the 2nd? It's October the something. But I think the debates clearly are going to be a big driver of sentiment. There was something of a relief rally in the end for stock markets. It's always easy to explain it after the fact, but because there was a feeling that Hillary Clinton came out of it okay. We saw something of a relief rally in stock markets. But I think that's going to be a big driver in the days and the weeks ahead. So for me, the bias is up. Let's just flip it back to the Dow, just to have a look at the levels there. So again, on the Dow, it's the trend isn't as tidy. It's nowhere near as tidy as the S&P trend. If we were going to draw it, again off those same, from a date point of view, the same lows. It's a little bit messier, but hopefully you get the general idea. We still have had a market that for the last couple of weeks now has been trending up and trying to recover the losses it made on that day. And even if it's sold off, I think we've got a lot of support just below where we are. So for me, immediate target, a run back up to those highs from, what's that, last week, just ahead of sort of 18,460, that sort of level. And maybe back up to this sort of area here. So my bias would definitely be, I think, to be a buyer for US stock markets. If you look at European markets, though, it's a bit messy. And I don't really care too much about European markets, because it is going to be, ultimately, it's going to be the US that leads the way. That's the it's not the European markets. They're not the tail that wags the dog. The US markets are the dog. So we need to follow the dog. And I think I put this level on Twitter the other day, and it did break. I was looking at I think 6,800 on the FTSE had seemed to be something of a level, and it all got a little bit messy. If we draw our high and low line in there, maybe horizontal. So I was looking at maybe this level as potential support. I think as it turned out, it ended up being more like this level down here. So I think it's a bit messier when it comes to European stock markets. Even that level went. But we've seen, not surprisingly, the FTSE drag back up with that US strength. So because we have seen what a bounce of 100 points over the last 24 hours for the FTSE, a couple of 100 points move yesterday for the Dow from low to high. In the short term, if you were looking at things like the RSI, you would say these markets are a little bit overextended. So don't be surprised if they start to sell off, but it still looks like a buying opportunity. I don't think it's anything to get too panicky about. The DAX was an interesting one. The German 30, to stick with stock markets, or one last chart. Let's just take this out to, let's say, 4-hour candles. Here we go. This was interesting, where again, the big levels are, they don't work all the time, but they do hopefully work enough of the time to actually try and make some money off. But we had the lows from a couple of weeks ago in the DAX around about 10,240, 10,250. It ended up being a springboard for nearly a 500-point move. The market collapsed quite heavily, but look over the last day or so where it's turned around. Once again, it's been an important level for the DAX. So like the FTSE, like the Dow, like the S&P, I think we've shaken off, I think anyway, that the weakness that's dogged the markets maybe up until last week. So I would be inclined to be a buyer and use these big levels. If we do see it sell off to these big levels, use these as maybe an opportunity to get on board and a sensible place to set the stop loss. Oh, someone's asking, what if I'm looking for shorter term levels? I'm glad you asked me that. So I'm going to say what I say every week now. I think again, it's going to be a bit difficult, I think, based on yesterday's chart, because we did have, quite a big range, a 200-point range yesterday. But for me, if you want to day trade this stuff, the previous day's high and low are always important. You can see just how, I think overnight lows or out of hours lows, we've maybe got to be a little bit wary about them. But lows that actually happen during market hours, like yesterday. So US stock market opens at 2:30. In the first 10 minutes yesterday, you can see it pushed down towards 18,050 and never looked back. So for me, if we did see some sort of 150, 180 point drop today, that would be a level to watch. There's not much in between. There's this one from the afternoon, a bit later on, 4 o'clock UK time, ahead of 18,100, and then we just sort of zoomed up. We consolidated for a bit and blasted higher and blasted out to the high. So I would say, I think there's a couple of ways. If you wanted to day trade it, there's a couple of aggressive ways to trade it. See how it opens at 2:30 and see if it forms, if it looks to you like it's forming a short-term base at 2:30. If you don't think it's going to pull back all the way to where it was before, see if it forms a short-term base and tries to move higher and put a stop under that base. It's not one I would recommend, because personally I want to have it set on absolute levels from at least the previous day. But it's an idea, because I think these markets have shown some strength in the last 24 hours. But it's interesting, and it has been, I think it's definitely presidential debate driven yesterday, but some peculiar moves, but ultimately the market finished off higher. So I think the expectation is for these markets to move higher, but to sit on the fence a little bit, even if they sold off. For me, there's lots of potential support that we've seen over the last 2 or 3 weeks that means sell-off has got a good chance of not sort of falling off a cliff. If we break these lows from early September, then all bullish bets are off. We need to start getting a lot more bearish. But I think for now, we have seen quite a bit of support built up over the last few weeks. So I'd be inclined to be a buyer of stocks. Let's look at currencies, because there's interesting stuff going on there. I think there's maybe a bit more wait and see stuff with currencies, but the pound, I tweeted about the pound a bit the last couple of days. It's always the way, isn't it, where you tweet about stuff, put stuff on Twitter, but then never actually do it, and that's the stuff that works out quite well. But going back to this idea, this support and resistance idea, the pound has been, I think, maybe particularly well behaved the last few days. Just look what's been going on here. My background is all technical analysis, so I understand Fibonacci and Gann and oscillators and all that sort of stuff. It's just I think that a lot of that stuff gets in the way of actually looking at what the market is doing, which is why I'm a big fan of this idea of big levels. Look what the market did. This is pound against the dollar. September the 23rd. So is that the end of last week? Is it the end of last week? Yeah. The market hits a level, hits 129.20 and rallies. It's still pretty weak though. But then coming into this week, the market manages to break only briefly higher and then sells off. But again, a couple of days ago, on the 26th, the market comes back down. Where does it hold? It holds ahead of the 12900 level. So those lows from earlier in the week that did see a half decent rally away from, proved to be pretty good. So if I'd have plonked my level on there. So it came back down to it. Just in case we missed it, we had another couple of opportunities as the day went on, and the market rallied. And again yesterday, I did, as it was happening yesterday, I said, we're seeing a repeat of what we've seen the last couple of days. Didn't get quite as low, but has pushed a lot higher. So I think it's interesting how it's worked, but hopefully it does show, this is a popular market. This is just the last few days, but this idea of trading off big levels, it doesn't have to be complicated. I'm not going to say it's easy, but I think if you're looking for levels to trade, there are some obvious ones that do jump out from these charts. But I think the pound's interesting because we have seen some strength. But let's just take a step back and look at the bigger picture, because I think you could argue, I'd be tempted to argue, that for those levels that we were looking at there, they're fine for sort of shorter term traders. But I think you could argue that in the medium term at least, depending on where you draw your trend line as ever, but if it looks, let's say that's a fair enough downtrend, isn't it? Let's say it looks something like that. You could argue that the trend over the last 3 weeks is still down. So even though we've seen, this is pound against the dollar, a bounce that's scraped its way above 130, the more patient, which I do try to be, but often fail, would be maybe minded to wait for a break of that significant high, 131.20, before talking about a major rally back up to 134.40. So I think it's an interesting one to watch, the pound. I think it's short term, like last couple of days, and maybe over the next couple of days, still looks strong. But the real test, I think, is going to be 130.90 to the 131.20 area. I think if we break that, then it's time to look for a much stronger recovery. Let's see what happens. But I think it's been an interesting market this week off those levels, off that sort of ahead of that 12900 level, and it is clawing back some losses, but clearly that trend is still down. So that's pound against the dollar. So I think that's an interesting one to keep an eye on, and there's been a couple of opportunities this week. The other one, they're all interesting. Euro sterling is an interesting one. It almost moved to a fresh sort of multi-year high yesterday. I think we need to go, let's start off with the daily chart. Let's try and do this textbook fashion where we start with a bigger picture. So this is euro against the pound. So it had been moving higher anyway this year. So end of last year, the euro was about 0.7. So a euro would buy you 0.7, 70p to put it into English. But we'd seen the euro recover. The euro rallied up to about 80, so we saw a 1,000-point move in the euro. Then, of course, we had the Brexit decision of the referendum, so the euro surged higher again. And then it just sort of dibbled around, but managed during July and August to push higher. So we saw fresh highs off the sort of post-referendum highs. And then I put this up again the other day. The big level to watch was here. Is that level here, and it's not broken it. You can see this 87.25 level has become quite the level for euro sterling. So one tactic, if you thought the euro rally was overdone, then this is your selling opportunity. If you think, well, there's going to be a massive euro sterling collapse here, the pound's going to win back some points. You're short at 86.10, you've got to stop above 87.25, so you've got a 100-point stop and a bit more. But if you think there's going to be a major move lower, this is the level to look at. But we've been watching that euro sterling trend for a few weeks, I think. And I think on the hourlies at least, that trend that's brought it up to that level is still up. So if I drew on my little trend line, so I'm not saying it's going to break that 87.25 level, but I am saying that I think, actually maybe not. Maybe it's losing. Maybe it's just starting to lose ground. Let's see. I still think we might get another squeeze higher back above 8,700, but you can see again just how well that trend has performed. We've seen a move higher, sell off, move higher, sell off, but hasn't taken out any significant previous lows. So for me, if someone put a gun to my head, I'd probably be tempted to be a buyer of euro sterling, looking for another squeeze above 8,700, but I'd want my stop the other side of these lows, sort of ahead of 85.50. So I'd maybe want to be a bit more patient if I was buying euro sterling. But I think based on the hourly charts, we might get another squeeze up, but we need to bear in mind just what a barrier that 87.25 level has been. Last time we were up here, we saw a shift in sentiment and the market dropped below 8,400. We saw a good 300-point and a bit more sell-off from that level. So I think it's an interesting one to watch, but markets seldom sort of do handbrake turns, and we sometimes take a little bit of pushing, a little bit of nudging to make their mind up what they're going to do. I think it's an interesting one to watch, euro sterling. I wouldn't be surprised if we get another rally back above 8,700, but I would bear in mind how important that 87.25 mark is. Sticking with euro, let's talk about euro dollar, because this is another one I put up yesterday on Twitter, and I was too early, which is often the case. But euro dollar had yesterday, or actually September the 26th, which was Monday, euro dollar had been chugging higher over the last week. So we've come from down these sort of levels up to here, and on Monday touched well 1.1280, sorry, and then sold off. So it pushed out to a fresh high for the recovery. That's bullish. And we had one day where it sells off, and for those sort of days, I'd normally treat them as a buying opportunity. So I was looking at it yesterday, thinking, well, what's the level to watch? The first level to watch is going to be here. These lows from down here. And I was looking at it, I think in the afternoon. Yeah, there we go, about 2 o'clock, between 1 and 2 o'clock, when it looked like it was stabilizing. And I was tempted to be a buyer. Then I saw it moved higher in the afternoon, and I thought, well, let's see what happens today. Today, it's come back down and it's broken that level. So for me, the fact it's broken yesterday's low means I probably wouldn't be in a hurry to buy it today. But I still think it's an interesting one to watch, because we've still got lots of, I think, potential support. We may be pushing it a bit. If it breaks this low here, the one it's made earlier this morning, I would throw in the towel and not be looking for any buying opportunities. But because it's only a couple of days since we made a high for this recovery and the highest for a couple of weeks, I still think there's a chance of maybe another squeeze higher in euro sterling. Adding a little bit of strength to that argument, I've talked about how I'm not a massive fan of oscillators, these sort of squiggly lines at the bottom of charts, but we do have the RSI, the Relative Strength Index. And I think I have talked about this before, the idea of divergence, where a market hits a low, pushes lower still, the RSI hits a low, but then when the market moves lower, the RSI is making a higher low. So it's like the RSI is in an uptrend. We've got a similar setup here, so it can be a suggestion the market is running out of steam. So if I was watching this afternoon, I'm not going to be around this afternoon, but if I was watching this afternoon, what I'd be looking for, fine if it sells off a bit from where it is now, but some strength coming in of at least an hour or two ahead of these lows, and then for me that could be the trades. A buyer down here with a stop loss under those lows. So I think we've got, we could have maybe, I don't know, 30, 40 points of risk, maybe 40 odd points of risk, potentially 80, 90, 100 points upside. I think it's going to be interesting to watch in the short term. Euro sterling, I'd be looking for euro dollar. Sorry, I'd be looking for a bounce. But if this low gets taken out, I think I'd sort of give up on my bullish outlook there. The one trade I've got going on at the moment is New Zealand dollar, US dollar, and it's this was brought to our attention on these webinars a few weeks ago, wasn't it, by somebody who said the trend was absolutely fantastic. Of course, as soon as we start following it, the trend has changed. It hasn't. It's just lost a bit of momentum. So New Zealand dollar, US dollar, that's our big trend. Going back a year now, going back to September, and September last year, and clearly it's our trend looks something like that, for example. Okay, so that's what the trend looks like. And I'm sure this was another one from Twitter as well, where I was a little bit early, but it was I think it was last Friday, where again a bit like that euro dollar chart we looked at, the New Zealand dollar, the Kiwi, had pushed out to a sort of a fresh high within this trend here, but then sold off quite heavily, but didn't really, it was only really, so on this day here it hit a high, but then spent the rest of the day in retreats, but it was fine, it hit the high. So I was looking for a buying opportunity, so I ended up buying roughly actually about here, where it is now, with a stop a little bit further away than we can see on this chart. There we go. A stop, I think, just the other side of 7,200. So I was a buyer at about 7,255 with a stop at 7,190, let's say. So I've got 65 points risk. But I was thinking, well, if the market's going to repeat what it's done before, I'm looking for a run back up, a 280-point rally, 230-point rally from here. So that's risking 60 points to make 230 points is a good trade. Now, the problem I have, one of the many problems I have, is I end up I think like most people, either getting out too early or giving back too much profit. So I'm trying a slightly different approach at the moment on a few trades, and basically on this one, I was waiting for a bigger move before I moved my stop. So at one point I was probably about 70 points in profit on this trade, but I was looking for more of a move back to these highs before I started trading my stop loss up. So of course what's happened, the market has come all the way back to where I bought. So now for me, the bullish argument is still valid. The fact that I've given up 60 points, 70 points of profit, the market doesn't care. It's just a retest of this low. So for me, as long as we see strength sort of, ahead of here in the Kiwi, I think it's still bullish. I'm still looking for maybe a run back up to these highs, and it's sort of based off the dailies and the hourly charts. You can see how 7,200 on the daily chart has propped the market up for a good 7 weeks or so now. So I think it's an important level, and a run back up to here is not a ridiculous expectation. I just need to be a bit patient. Let's see what happens. So that's the one that I'm in at the moment, and again it's these 7,200 levels I think are the important ones. What have we done so far? We've done pound against the dollar, euro sterling, euro dollar, New Zealand dollar. There is a lot going on. One we haven't looked at I think for a bit, but again I think is an interesting pair, is dollar Canada. So the dollar Canadian dollar. The Canadian economy is very much, it's a bit like, no it's not. It's a very commodity-driven economy, but focused on one commodity, and it's oil. So what goes on with the price of oil has a real impact on the Canadian economy and the Canadian dollar. This is the daily chart. Look at the moves from last year. I used to write a column for Shares magazine on foreign exchange, and it was always great. I've done it for the last couple of years, and it was great to write about the dollar against the US dollar, Canadian dollar, because you get such brilliant trends. I mean, look at this fantastic trend from when's that from? Is that from 2014? If I could read, 2014, just bang, 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 all the way up to the end of last year. So a cracking 2-year trend, and then doesn't mess about, doesn't go sideways for a year, just bang, just goes right back down again. So moves thousands of points up, and then for much of the first bit of this year loses about 2,000 points on the way down. So it's a really interesting market to trade and keep an eye on. And I think although it has been a bit sideways at the dollar against the Canadian dollar over the last few months, I think it's interesting again because it's threatening a big level. If we were going to look at this downtrend, has definitely broken the downtrend from the beginning of the year. But if we were looking at some of the hurdles on the upside, we've got, well, immediately where we are now for a start, 132.17, the highs from in April, just before it sort of, plummeted again. You can see how much it struggled in July. I must admit, I think I had a trade on it then, and I was getting a bit frustrated because I got stopped out, I think at least twice, trying to go shorts up here. But you can see, so it has a little poke through, then changes its mind and sells off. And it's doing the same thing again, it's having a little poke through. But just yesterday, it moved to, that's its best levels since March this year. Again, you can see it didn't really hold it. But I think it's a really pivotal level, this sort of 32.20 for the dollar against the Canadian dollar. And I think if we saw a proper move through there, I think we could see a real trend starting again. So I think it's an interesting one to keep an eye on. I think maybe the more conservative won't want to see it just faffing about with that level all the time like it has been. We'll maybe want to set their level maybe a little bit higher up here. Let's say 133 for sake of argument. 133 on the dollar against the Canadian dollar is a bit of a level to watch. Once again though, if there's absolutely no reason why you wouldn't go short up here. We've seen the market do what it's done just back in July. It's tried to push higher and it's failed. So an aggressive trade would be short at 32.19 with a stop above this high from yesterday. I think based off the hourlies, the trend I think over recent days is probably it is still up, isn't it? But you can see the battle going on at this level up here. So I think it's a really interesting one to watch. So I think maybe when we come back to that next week or the week after, we'll have some resolution with what's been going on up there. But dollar Canada, I think, is one we're going to start watching in the days ahead. Aussie dollar, US dollar, we've talked about this a bit in the past. I mean, that trend has been better than the New Zealand dollar trends in recent days. We have seen it sort of push higher again. But just to remind ourselves, on the big charts, the big picture chart, We had been. Hang on, maybe I need to go back even further. I need to go back weeks. There we go. To remind ourselves on this is the Australian dollar, US dollar. We're still at this juncture where the trend is still down, and these highs from April are the big ones to watch. I think it's still positive though. We still see dips being bought, but maybe 78.30, 78.50 is the level to watch on that one. And you can see on the hourlies, you'd have done all right buying the dips on the hourly chart, and there's no reason why I still wouldn't be a buyer of the dips today. Maybe looking for a little bit of a squeeze higher, because just yesterday it made a fresh high for this recovery. We need to bear in mind that we are near that sort of major trend line, but I think again it's an interesting one to watch. That trend is still up, everything still looks okay. Let's see, we'll keep coming back, but like the dollar, Canadian dollar, we should get some sort of resolution in the next week or two about what's happening in those major trends. So there's a lot going on, isn't there? There's I think an awful lot going on. For me, the immediate one that I'm watching is euro dollar, because I thought yesterday, oh, there's a reasonable chance for a rally from here. It has failed, but I'd have a second bite of the cherry today. So I think that for me is the immediate one. Pound against the dollar, I think in the short term is strong, because we've seen 129 hold, but don't forget that trend from the beginning of the month is still down. And actually another one to look at before we have a look at oil and gold is dollar yen. We've looked at this quite a few times now, and there have been some good opportunities, but it's been, the last few weeks at least, it's been a bit stuck in the middle of nowhere. But I think dollar yen, the bigger picture thingy, the trend looks, if I could get the right line, it'd help. Hang on, high low, there we go. Our trend looks something like that, dollar yen. And it's always difficult when it starts looking like, well, is it breaking out of the trend, to think, well, has it actually broken the trend? And I think even though it's managed to poke its way out of that downtrend, we've still got lower highs and lower lows. But we've seen how much over the last few months this whole 99 to 100 level in dollar yen has stopped any more weakness. So maybe we're coming to something of a turning point in dollar yen. Again, I think it's one to watch. There's maybe nothing immediate there. There's maybe better opportunities out there in the likes of the euro. But I think it's an interesting one to watch down here. Let's start wrapping things up. We'll look at the price of oil and gold. We saw a big move. I think was there talks with OPEC and Iran, I think, wasn't there, on the price of oil? So I think it's the Iranians can produce it and get the stuff out there for much cheaper than the OPEC countries would like it to be. So I think we've seen a fair bit of volatility in the price of oil. Hang on a second. I think I've clicked on the wrong thing now. Let's just bring up gold and flip back to oil. Maybe because the contract's expiring. Brent crude oil. Let's see. It's not coming up, is it? That's not oil. Not at $1,300. It's not. But my view on oil, I think it's still confusing. I think it's still a confusing market. I think last week I was saying it looks more up than down, and it went down a bit, then it went up a lot. But it's still, I think, trapped. It's trapped in that range. Let me see. Let me pick up Brent. There we go. Let's have a look at Brent crude oil. So not the US one, the British one. I think that's the market. We'd had the trend. We'd had that massive move down, then that massive rally where it doubled in price, and now I just think we're in no man's land. I think, like I was saying last week, I think it's more up than down still. And if we flip over to the hourly charts, you can see don't forget this is the Brent contract. You can see what a half decent job $45 to $45.50 a barrel has done in supporting it. So if I was a buyer, I'd want my stop somewhere at the other side of there. But I think when a market is like this, from in my experience, painful experience, if it's a bit, 6 of one and half a dozen of the other, why try and force it? Try and look for something that's maybe, hopefully, a bit more obvious. Something with a definite trend. I mean, it's just chop, chop, chop. isn't it, the price of oil? Around, in this range from 48 to 45. So it'd be a seller up here and a buyer down here, I think, is the best thing to say about oil. And finally, gold. I've been bullish on gold, I think, since we started doing these webinars because of the trend for this year. So let's just remind ourselves actually of the longer term trend, because for years, you did not want to be bullish on gold. We had this fantastic run up, this incredible run up in the first decade of this century, where it touched 1900, and as these things go, people were calling for $3,000 an ounce, and it's exactly that time when everyone says, well, it can only go up, but the market just does one thing. But I think the moves we've seen, it looks like we've definitely broken the back of the most recent of the downtrends. It's trading at levels we haven't seen for more than 2 years now. And I think if you looked on the daily chart, even though it's gone a little bit boring over recent months, I think that trend is still up, as long as, I think it's the 1300 level, isn't it? I've been banging on about for a while now. So I think the 13, let's say, these lows here, these lows from late August, so around about 1300, and you can see the trend lines holding it. So for me, it'll still be a buyer. It just needs, clearly it's just been losing ground since June, but no market moves in a straight line forever. Look at the moves we saw back here, sort of April to June. The market sold off. So I think for me this is just a normal corrective messing about, and it's only if it loses the $1,300 a barrel. Dollars a barrel? $1,300 a bar. Oh, dollars an ounce. What am I talking about? $1,300. Only if it loses $1,300 does it start to look like that trend is coming under some pressure. But I think it's still bullish, the price of gold, even though it's a little bit boring. So that's it. So I think the immediate ones to watch are stock markets. We had some crazy moves over the last 24 hours or so, 36 hours, because of that presidential debate. But famous last words, and if you looked at the Dow and the S&P, it does look like they're maybe shaking off some of that weakness that's dogged them. The fact that yesterday it pushed through the highs, or in the overnight market it's pushed through the highs of the last few days, it does suggest, personally, I'd want to be a buyer of dips. So I think that's maybe the immediate one. And euro dollar, I think, is an interesting one. It's getting a bit of strength already. Maybe we won't get the retest, but I think maybe that could be the pivotal level for the next few days on euro dollar. But that's it. We've done it feels like we've done a lot of stuff today. There's lots of different things. A little bit longer than normal today. So I'll wrap things up there. I'll just plonk up my contact details. So if you have any questions, I don't have all the answers, but any questions about it, just drop me an email. So I'm david@tradeafter.com. You can follow me on Twitter. There was a question about Twitter about how useful it is. There is a lot of rubbish on Twitter. It's quite ironic that Disney, I think, are one of the companies rumoured or have come out and said they're thinking about maybe putting a bid in for Twitter, which is very ironic considering the amount of Mickey Mouse stuff that there is on Twitter. There is a lot of dross out there, but I think it is. I think if you follow the right sort of news feeds, it's a great source of breaking news. And it's an interesting one I just put charts up there, big levels that I'm looking at, stuff like that, and try and keep the drivel to a minimum. So I think there is some mileage if you're trading or investing in having a look on Twitter. So I'm at Jones the Markets on Twitter, and I've written some stuff on social trading, because that's the other webinar I do with Aondo, is copy trading, following other traders. And I'm www.tradeafter.com. That'll take you to my website that's got some stuff on copy trading and a few other bits as well. But that's it. I think there's plenty there to keep us busy over the next few days. I hope it goes well for you, and we'll do it all again next Wednesday at 12:30. Okay, thanks for coming along. Goodbye.